HDFC Bank slides more than 3.5%, now 4% lower on the back of its first quarter business update as CASA ratio declines and advances as well as deposits slip sequentially.
RBL Bank declines over 2%, even as deposits fall 2% in Q1 FY25, while advances rise 3% sequentially.
Rail stocks, Ircon and RVNL climb after Ircon, as part of a joint venture, gets 750 crore rupees orders coming in from RVNL.
Raymond surges close to around 7% after the board approves demerger of the realty business, where shareholders are to get one share for every one share held in Raymond. Mahindra Life Spaces also climbs after bagging a Mumbai redevelopment project with a gross development value of around 1,800 crores.
Kalyan Jewellers, mildly higher on the back of its first quarter business update. The consolidated revenue for the company grew at around 27%. Same-store sales growth of 12% for the India business, with a revenue growth of 29%.
Hello and welcome to Chartbusters. I'm Nigel D'Souza, and joining me as always is Mangalam Malu. Well, the markets at around 10 a.m. were down more than 100 points. We have cut those losses in half. Reliance Industries, that's the big boy that's fighting for the bulls, while HDFC Bank is the one that the bears have turned to in today's trading session. The stock is down close to around 3.5% as we speak. Hey, Mangalam.
Hi, Nigel. You know, some of the heavyweights, Reliance is doing some of the lifting. Let's see what happens in the second half. Will the dip in HDFC Bank be bought into or not? Because we've seen some recovery from the lows on HDFC Bank. When the rally started, there were factors which were in place for HDFC Bank. But at some point, maybe, around that 1800 mark, people thought that maybe the rally is extending itself or there is some sort of congestion. So the question is, at what point do we see buying?
Well, that's right, Mangalam. Getting into that MSCI announcement event, we did see a big amount of long build-up, massive delivery-based buying as well, and everyone was all in with regard to that particular trade. So it seems that technical factor, though it takes place in the month of August, that will not be the surprise factor. Now we turn back to earnings, and the update that came actually was quite disappointing. But talking about two heavyweights, Mangalam, what a scene it was yesterday, right? Both those heavyweights, Rohit Sharma as well as Virat Kohli, coming together and lifting up the trophy. You're a lucky man, you were there.
I am the lucky man, I was there, and I was a luckier man when I was there in 2007 as well. So I took a picture from the same place, 17 years apart, Nigel. What was interesting is when, after the whole thing happened, both Rohit and Kohli said when they first won the World Cup, they didn't understand the magnanimity of that or the enormity of that situation. But 17 years later, there has been a lot of life that has gone past them. They've seen a lot more, matured as individuals, players, families have come again. And with that, winning that, made them feel a lot more. And they now truly understood the emotion of what it means. I hope that, for both of us at some point in our life, something close to that sort of feeling comes where you've lived a full life, suddenly got an achievement, and maybe both of us at some point will lift something as well as we, hang our shoes.
Absolutely, Mangalam. For the time being, I think we're doing a pretty good job, so let's continue. But kudos to those boys, the men in blue, scintillating stuff out there. Mangalam was at the venue, and what a feeling, as Mangalam spoke as well. It was goosebumps yet again. Well, let's get back to the markets then. And since we're down close to around 50 points, we turn our attention to Manas Jaiswal for a quick technical check. Hi, Manas. Hope you're feeling good on this Friday morning. Well, if you bought the dip at the low point of the day, you'll be feeling good. But what do you do from here? Do you think you have enough to pull back from the lows of the day? And I particularly want your comment on HDFC Bank, because that's seen a correcting of around 150 points just in the matter of 3 days.
Good morning, Nigel. Good morning, Mangalam. So yes, we have seen some correction, but I think this is totally justified. We have seen almost 1,000 points rally in last 7-8 trading sessions. And Nifty is still trading above 10-day moving average. So I feel that Nifty has a lot of support in the range of 24,100 to 24,000 levels. So I think this correction is a great buying opportunity. You can take a long position here in Nifty right now. Keep your stop loss below 24,000, and target would be around 24,700. And I believe that in next week, you can see the levels of around 24,700. So I'm still bullish on the markets. If you're talking about HDFC Bank, even HDFC Bank is looking very strong on the medium to long-term charts. Yes, on the short-term charts, it is looking weak. It is trading below 20-day moving average now. You may see some more correction. It can go down and test 1600 where the 50-day moving average is placed. But I believe that this correction is a great buying opportunity for next 2 to 3 months' time. The stock has a lot of support near 15,500 to 1550 to 1500. So on correction near 1600, I think one can take a long position. Stop loss should be around 1490. And again, the target would be around 1800 to 1815 HDFC Bank.
All right. And individual stocks, from the way the markets are right now, even as you know, there is some correction at the frontline end of things, the broader markets are actually doing not particularly bad. We have 1,300 stocks which are advancing, for about 1,000 stocks which are declining. So do you have any buy calls from the broader markets? The mid-cap index actually is at the high point of trade right now.
So two recommendations. First is a buy call on Cipla, because here most of the pharma stocks are doing well. Cipla is trading above 20-day moving average now. I think one can take a long position in Cipla right now, keep the stop loss below 1490, and target would be around 1550. And second is a buy call on BEL, where stock has given a fresh breakout. Stock has broken the resistance of 320. So take a long position here also. Stop loss should be around 319, and target would be around 340.
Speaking about BEL, let's look at BEML as well. Typically, you know, these stocks move hand in hand, but right now BEML is up at almost 16% right now. It's a big move that we're seeing. Another record high for the stock, another up move that we're seeing. Do you have a chart call here? Because what do you call it? It's a parabolic move.
Definitely, and stock is, I think stock is up 16-70% right now. So I think one should wait for a correction. But if you're long, you can definitely enjoy this rally. Revise your stop loss to around 5,000 mark. Target would be around 5,900 to 5,950.
16% right now. The last 12 months or so, it's up around 250%. So that's the kind of move that we've seen on BEML. But just before we move on, pull up the intraday chart of Sheela Foam. That stock's recovered about 4% from lows. About an hour ago, we had the management join us saying that they are targeting around 15 to 16% revenue growth this year, 10% volume growth that would be led by about 10 to 15% value growth as well, with stable raw material prices and integration of Kurlon coming together as well. All these factors working for the company. The stock has seen a correction from the start of this year. So from those lows, maybe picking up post-management commentary, the stock has moved to the high point of trade. But let's talk about some ideas for profit coming in from our colleagues at Money Control Pro. Neha Dave joins in with a stock that she's been talking about.
Today's stock idea is CDSL, that is Central Depository Services Limited. The Indian equity markets are on a roll, and it is not just the secondary market that is racing ahead, but primary market too is buzzing with record number of new issues. CDSL, which is the only listed depository in the country, will be one of the key beneficiary of the booming primary market as well as the optimism in the secondary market. There has been healthy additions to new Demat accounts in FY24. However, there are more reasons than just Demat account additions that makes CDSL worth a consideration. The strength of the business model, potential opportunity from mandatory Demat for unlisted companies, issuance of new insurance policies in Demat form, and optionality from the new business ventures are some of the factors that can drive the stock upside. While the recent spurt in the market activity may or may not sustain, structural factors like rise in financial savings and increase in market capitalization in sync with the economic growth are some of the factors that will continue to aid the growth of depositories in the long term. The CDSL stock has doubled in past 1 year. Currently, the stock is trading at around 40 times earnings estimated for FY26. The valuation is undoubtedly rich. However, in part, it is justified by the return on equity, which has improved to 31% in FY24. While the stock looks expensive, there can be upside to the current market price driven by earnings growth. Long-term investors looking for relatively low-risk capital market business should add CDSL on dips.
All right, with that, we'll step into a short break. On the other side, we'll get you more on the markets and stock-specific action. Stay tuned.
Welcome back. Well, the markets are down close to around 50 points or, but my director is going to be pulling up the contribution chart to tell us how much HDFC Bank is dragging the index. And I think majority of this 50-point downtake, if not all of it, will be on account of HDFC Bank. At some point of time, that'll come up for you. Even in yesterday's trading session, HDFC Bank was the big drag on the index. That's the contribution chart. Well, all of it is on account of HDFC Bank. But Abhishek joins us to tell us about the fundamental news on that front. Abhishek, these numbers look a little bit disappointing.
Well, the number of deposit acquisition looks to be on the weaker side, and that's not gone down well with the street. CASA, absolute deposits have declined. Even the CASA ratio has declined. However, liquidity coverage ratio has improved, and the focus of the bank is on lowering the CD ratio or credit deposit ratio. Take a look at deposits. They are down 0.03% sequentially. Now, system-wide, if you take a look, YTD FY25 so far, the system deposits are down 1.65% on a sequential basis. CASA has declined by 5% quarter-on-quarter. It's seasonal in nature. Even last year, in Q1 FY24, CASA had declined by 2.75%. So this time, it is on the higher side, 5% decline owing to, there were elections as well, and money has moved into, term deposits as well with respect to CASA, for the customers. So CASA ratio has declined by nearly 200 basis points sequentially. Advances growth that has declined by 0.8% quarter-on-quarter. In that, the other wholesale advances, that book has declined by 26,600 crore as management had highlighted that they are going cautious with that book on account of the low yield profile that it is getting for them. Credit deposit ratio that's declined to 104.5% versus 105.4%. Good part in the update was the liquidity coverage ratio that's improved to 123% versus 115% in the previous quarter and around 104-105% in the quarter before Q3. So if you take a look, brokerages largely they remain bullish on the stock. However, they say that deposit accretion was weaker than expected. High rundown in current account, 42,500 crore of outflow was seen in current account. Credit deposit ratio was flat. So only Nomura has a neutral rating and a target price of 1,660 per share. Other brokerages they remain bullish on the stock. Target price ranging from as low as 1,725 per share to as high as 2,100 per share. Back to you.
All right, Abhishek, thanks a lot for that. So that's about HDFC Bank down about 4.5% at the low point of today's trading session. But on the way up are some of the real estate companies, and this is Mahindra Lifespace on account of a redevelopment program, and alongside that, Macrotech developers as well on the back of their first quarter updates that have come by. Sonal joins in with a detailed analysis of that. Sonal.
Well, let me start with Mahindra Lifespace Developers. There are two updates here. The first is that the company has been chosen as the preferred partner for redevelopment of 7 residential societies in Borivali, which is in Mumbai. Now, remember, they have spoken about how redevelopment is a big opportunity and they plan to cater to this segment as well. Here, the development value will be 1,800 crore rupees. The second news piece is that the company has acquired 2.37 acres of land situated in Bengaluru. The developable potential here is 0.25 million square feet with a gross development value of 250 crore rupees. Remember, it was just yesterday that Brigade also bought a land there. There has been a lot of land buys that these realty companies have been doing pan-India, so that remains in focus. For Macrotech developers, it was a good set on a YOY basis if we look at the operational data, but sequentially it was a decline. Pre-sales up 20% on a YOY basis, collections up 12% on a YOY basis. They added 3 projects in the MMR and Pune region, having a gross development value of 11,100 crore rupees. Now remember, they have guided for business development of around 21,000 crore rupees. So it's 50% more than that they've already achieved in Q1. So looks like this is something that they could surpass in FY25 itself. Net debt stands at 4,320 crore rupees. It is below that 0.5 times net debt to EBITDA mark, but in absolute terms it has increased, so that is something we'll be watching out for as well.
Okay, all right. Thanks a lot for that. So now for the time being, we'll slip into a short break. We come back, we'll continue our focus on markets. The Nifty Bank has bounced off the low point of the day, so has the Nifty. Slip into a short break, come back, focus on markets and stocks that are moving around.
Well, it is such kind of a market. Look at Revenues Tech, which is basically Ixigo, reported their fourth quarter numbers yesterday for the first time since listing. We're in almost the middle of the second quarter right now. But, the stock listed somewhere in the middle of June. The issue price was 93. From there on itself, it's almost doubled and only gaining. The management joined us saying that they are likely to grow faster than the online travel agency industry itself and willing to let go of a few basis points of margins as well to grow faster. So it'll be very interesting to see how much, the street prices this stock going forward and what's the kind of growth that is priced in right now. As of now, the street is anticipating over 800 crores in terms of revenue for this year itself. But another stock which is on our radar is Kalyan Jewellers as well. That is mildly in the green right now. It's a good up-to-date that is coming from Kalyan Jewellers. For the overall business of the company this time around, in the first quarter, there has been a growth of 27%. India business has seen a growth of 29%. So Kalyan Jewellers, while it's flattened out today, over the last 12 months or so, the stock is up over 230%, as our director just showed us, and which is what explains why, despite a strong number, maybe the stock hasn't given that sort of intraday up move. 27% growth in the first quarter at a time when there was no wedding season or no other festive season as well. India operations grew about 29%, which accounts for 85% of their sales. Same-store sales growth was around 12% as well. And additionally, they have been on an expansion spree. They've been doing that as well. Launched 13 Kalyan franchisee-owned company-operated showrooms in India during the quarter. And Middle East, which contributed about 15% to their revenue, grew about 16% itself. More importantly, after this big up move and a mild green tinge that we're seeing, the big triggers in the second quarter would be the upcoming festive season, starting with Onam, the wedding season itself, and these new showrooms that the company's launched. As they start to contribute to the company's revenues, we'll see further growth out there. So Kalyan Jewellers, after a big move, staying mildly in the green.
Okay, all right. Well, let's move on then and let's talk about Angel One. The gross client acquisition rose while the daily turnover numbers were also higher in the first quarter of FY25. Pamakshi joins us to tell us more on that. Pamakshi?
Well, absolutely. It's a good update coming in from Angel One. For the month of June, gross client acquisition stood at 9.4 lakh, and in fact this is an uptick of almost 7% coming in on a month-on-month basis. Until April, we witnessed a decline in the gross client acquisition per month, but since then it has now reversed, and this is in fact the second consecutive month where the gross client acquisition has picked up. Resultantly, we're seeing a nearly 4% uptick in the client base. It now stands at 2.47 crores. Average daily turnover too saw an uptick. It came in nearly 4.3% higher month-on-month at 45.7 lakh crore. This bodes well from a brokerage perspective, as well as this has also risen for the second consecutive month. So good out there for Angel One. The market share, they managed to gain some bit of market share in the F&O market, which was up nearly 10 basis points month on month. Equity market share, however, has dipped by nearly 30 basis points to 18.9% after spiking to nearly 19.2% in the month of May. And the commodity market share has seen a significant jump of almost 2% to 59.1%. So overall, it looks like a good update from Angel One, and the stock in today's trading session is holding higher.
All right, Pamakshi, thanks a lot for that. So that's about Angel One, up around 1.5%. Now, cement stocks are in focus. Brokerage house Antique has issued a downgrade on Ramco Cements. Nigel, tell us more.
Well, that's right. Ramco Cements actually was down close to 2% in the morning trading session. Yesterday as well, it was down close to 2% because the cement industry was a little bit fearful about price cuts and no price hikes actually coming about because of the monsoon. But the reason that the stock is in focus today is because Antique has downgraded the stock to hold. They've cut the target price to 840 rupees. When there's a price target, there has to be two factors at play out. One is the earnings they could have trimmed off, which they have done by close to 5 to around 8%, the EBITDA estimates. And they downgraded the multiple as well. Now they're giving it 12 times in comparison to around 13 times. Basically, they're factoring in lower profitability. Why is that? 4 reasons. One is cement prices are at 4-year lows, and even in the past quarter, they saw a big decline, contraction in prices, both on a sequential as well as on a year-on-year basis. They say that we may not see any meaningful improvement in pricing from here on. Point number one. Point number two, they have close to around 75% of their total mixed in South India. And out there, the utilization levels are around 65%. Antique says they're expecting it not to go below 55%, but not to go above 85% on. So it'll be in that vicinity of around 55 to around 85%. They say as of now, the utilization levels are at around 65%. They also highlight that in South India, they've seen some consolidation. So larger players coming in and taking a stake or either buying out smaller names. Like Penna got taken over by Ambuja. You had, the Ultratech going ahead and taking over Kesoram. And now Ultratech has gone ahead and bought a big chunk in India Cement. So those assets could ramp up. If that's the case, it could put pressure on pricing and in terms put pressure on profitability as well. And profitability is key for Ramco to go ahead and deleverage their balance sheet and also to get a bit of a re-rating. For the time being, they've downgraded the stock to hold and they've trimmed the target price because of all these reasons.
All right, Nigel, thanks a lot for that. That's about Ramco Cements, down about 1%. We spoke with Ramdev Agarwal, chairman and co-founder of Motilal Oswal, on the moves in the market that we've seen. We spoke to him on a whole host of things, including the cement space. But the thing that really stood out was the doubling of the Sensex every 5 years. So let's hear his conversation out with us on CNBC-TV18.
Year after year, for 44 years, I have seen this market growing at, I didn't know that it is 16%, I thought it is 15%. This is a 15% country. India is a 15% country. So I have seen, I mean, like every 5 years it doubles, like from 40,000 to 80,000 it has become in 5 years, exact. So it's about 15%, and longer term is also 15-16%. So there is no reason to believe that going forward it will be anything significantly different. It might become 14, it might become 16. So if you go at 15, I mean, let's keep the base rate 15. In 5 years flat, 2029, you will be 1,60,000. Retail, which is, see, in 1.4 billion people, at least we should have 500 million people in the market. We still have only 160 billion or 100 billion. So this journey of inclusive development of the markets, because the risk capital is going to come from not from the top end of the population. Risk capital will come in a truly distributed way from across the country, and that is the revolution which is on.
Okay, all right. Well, on that note, though, we'll wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.